Stocks continue their climb higher. Metals, realty and IT are the key gainers. FMCG and energy trade soft.
Axis Bank sees a block deal of over 3 crore shares worth over 400 million on likely sale of its stake by Bain, while two investors in Gland Pharma sell nearly 5% of its equity at a steep discount to the current price.
Sterlite Technologies launches a QIP which sources say can raise up to 1,000 crores in the near term at about 113 rupees per share, while Shilpa Medicare floats another for about half the sum with a floor price of nearly 477 rupees per share.
The ONDC chief, T. Koshi, tells CNBC-TV18 the platform, after clocking 50 million transactions in FY24, is now targeting as many transactions in a single month by the end of FY25. This speaks volumes about its early success.
Good afternoon, you're watching us here on Halftime Report. If there are any mistakes in your portfolio, today is the day where you can go ahead and erase them all. That's the market that we're at. 22,750 for the Nifty, all the frontline indices doing extremely well, but the magic is beneath all of that. The small cap index and the mid cap index, every stock, nearly every stock is surging as we speak. All guns blazing, Ekta.
Hi, Manglam. Yes, absolutely. All guns blazing on a public holiday for most people as well. So, yes, everyone's probably sitting at home and punching those numbers or making those calls. But nonetheless, the other big cue, which we're definitely going to watch out for, and maybe there is a little bit of wait and watch for the other global markets, maybe not for India, is the US CPI data, which is out today. So that's for the month of March. It is estimated to probably inch up to around 3.4% versus 3.2% on a month-on-month basis. It is probably expected to come in at those levels. So let's see. But in any case, the expectations from the Fed have been cut drastically to around 2 rate cuts as compared to, the 5 that was earlier anticipated. And maybe June expectations are also lower. So that would be a key data point to watch out for.
Indeed, Ekta, and it's surprising that, with the Fed not having cut rates yet and the probability going down as well, the markets are constantly going higher, and it's not just the equity markets. If you look at Bitcoin, that crossed $72,000 yesterday. Gold is doing extremely well, Manisha has been telling us. And over the last 3 or 4 days, silver has perked up as well. Silver is at nearly 80-90% of its previous record high. So gold, silver, real estate, all these companies are saying prices are higher. Anywhere a person is putting money, so long as they are, apart from bank interest rates, they are making a fair amount of money. I hope that this wealth effect leads to some sort of consumption boom as well, because all the companies are saying they aren't seeing as much consumption.
Yes, absolutely. And, these are some of the questions which we are probably going to pose to all of the guests that we have coming through the show. We have some big guests which are lined up, which we'll get to in just a bit. So stay tuned for that. But first up, let's talk about a couple of stocks. Infosys is the top Nifty gainer this morning, following an upgrade which is coming from BofA Securities. Remember, Nimesh was the first to highlight this note in the morning. Let's go across to him for more. Nimesh.
Hi, Ekta. So the timing is also equally important, right? I mean, just 1 week before the earnings season and the results, BofA should upgrade the stock to a buy. They have a target price of 1785, which suggests a potential 20-24% upside from current levels. Now, BofA says that they expect the stock's 40% underperformance to Nifty since CY22. That should start reversing. In fact, for FY26, they're forecasting the revenue to rebound to 9% on the back of spending on the Basel III by banks, as well as upgrades, pending upgrades on the SAP level. So that could lead to a earnings trigger. In fact, earnings this quarter is expected to provide a final cut or a floor to the earnings outlook for Infosys, and they have raised the FY26 EPS estimate by 4%. Now, BofA believes that valuation appears quite attractive and sensitive to the recovery in terms of earnings. But on the back of expected earnings to improve, an upgrade on Infosys to a buy now from BofA, and they have a target price of 1785, a potential 24% upside from current levels.
A trigger was needed, Nimesh, and the stock is up 2%. Thank you for highlighting this, not just now, but in the morning as well. The stock's doing extremely well, and with the weight that the Infosys stock has, if it does move further and go back to the target that Nimesh has been speaking about, we would see a much higher level on the Nifty itself. Speaking about the timing of that report, let's talk about the earnings season of the tech stocks as well. In just a few days from now, we will have the earnings upon us. This morning, we spoke with JP Morgan's Ankur Rudra to give us his view on the revenue growth outlook for all the IT companies and what he makes of the general space at this moment. Let's hear him out.
Let's look at the scale IT services companies to start with, where ability to grow very, very strongly, especially in double digits, appears to be relatively lower. We think the scale IT services companies, let's say above a certain threshold, call it $5 billion or so, can probably grow in the medium, I would say the mid to high single digit sort of ballpark. In that sort of range, maybe they might see 1 or 2 years of slightly stronger growth. The second group, I would say, is the larger mid-sized companies across IT services and engineering services. Engineering services as a subset, I think that's one subset which has seen lower penetration where growth can be meaningfully higher. We would expect growth there, which currently ranges between high single digits to, let's say, double digits, can be structurally at low to mid-teens for at least 4 or 5 years. So they can go a bit faster. So we think that what's interesting is in the last 2 or 3 quarters, I think what's accepted is that we've seen a significant amount of bottoming out of demand. So to that extent, I think revenue momentum appears to have bottomed out. But the challenge really is that when does this see an upturn? And we don't have visibility of that yet. So while we have seen an element of bottoming out on revenue, on demand, the visibility of recovery is not super clear. And I think the confidence on bottoming out also is supported by some other factors. I think it appears to be relatively broad-based. We've seen some recent indicators like hiring indices suggesting something similar. But I think the sort of the tougher question to ask is the timing of the recovery from here on.
Okay, all right. We don't have to wait too long to see what the IT companies deliver. We do have TCS, which is coming out with numbers this Friday. But let's move on then. Godrej Properties is surging in trade after reporting its 4th quarter business update. Sonal is tracking this. She's here to tell us what the street liked about this.
Well, it was the highest ever quarterly sales and the yearly sales that the company has seen as well, and it is the highest that we've seen in the listed universe. The company has been able to beat their FY24 guidance by 61%. So the sales are 61% higher than what they had actually anticipated. In terms of quarterly numbers, the bookings are up 135%, their volumes are up 52%, and in terms of the annual numbers, their bookings are up 84% to come in at 22,500 crore rupees. We spoke about Prestige yesterday. Their sales came in at 21,040 crore rupees. If we talk about volumes, they were up 31% as well to come in at 20 million square feet. They are largely a Mumbai-based player, but their NCR region has done really well, up 180% on a YY basis to come in at 10,000 crore rupees. Their Mumbai sales were at 6,500 crore rupees, which is a growth of 114%. As I said earlier, it's been the highest so far in the reported listed space and looks like it could be in terms of sales. So the list suggests that Prestige Estates came in at 21,040 crore rupees, their Signature Global at 7,270 crore rupees, Macrotech at 14,520 crore rupees, and Godrej tops the list of all the listed developers who have reported numbers so far.
Indeed, and that's reflected in the kind of up move that we're seeing in Godrej Properties as well. But not just that, in fact, the other, entire pack is abuzz this morning. We've seen decent gains on names like Ajmera Realty. They reported their numbers as well. Alongside that, we have Sobha, which is up nearly 7%. Kolte Patil, another Maharashtra-based developer, doing extremely well, up around 6% on that stock. And India Bulls Real Estate continues its up move after announcing the participants in its recent fundraise exercise. So that stock up another 4%. Real estate stocks doing well. All the stocks actually doing a lot better than what it was earlier itself. Take a short break, come back. Sachida Anandutekar joins in with some trading strategies in a market which is roaring. Welcome back. With all the stocks doing extremely well, let's pull up Container Corp. That's moved to the high point of trade. Page Industries has been picking pace all since morning. So Page Industries has also moved to the high point of trade, and from an absolute price point, it is hefty. So the price moves are also reflective of that. 1,350 rupees added on that stock price right now with a gain of 4%, and we're seeing a decent bunch of gains accruing on names like MCX as well. All the commodity stocks, or rather commodity-related counters doing well. So maybe the commodity exchange benefiting from that as well. Indices at a record high, no problems whatsoever. The Nifty Bank, as well as the mid-cap index. But at the same time, if you look at the metals index, that's been the star of the show this month so far, up 9% in the month of April. And as a result of which, we've seen, all the metal stocks come up and drum up the sentiment in that space itself. For the Nifty, financial services, it's a Tuesday, so Nifty Financial Services expiry plays out. The most active options are the 21,750 call and the 21,650 put. The Nifty Financial Services index is closer to the 21,750 mark. So if it sustains here, then maybe there's room for short covering. But if it doesn't, then maybe 100 points lower is what people are believing supports could play. For the Nifty itself, the put call ratio has moved closer to 1.37 versus 1.2. And it's typically around 1.4, 1.45 that the market sees a bit of overheatedness and some bit of topping out. So that's a mark that we need to keep on our radar. More so because tomorrow is a Wednesday. We have the weekly options expiry of both the Nifty and the Nifty Bank because Thursday is a public holiday. And ahead of that, the Nifty 22,750 call, which is about 30 points from where we are today, has been extremely active. So the bears believe that there would be congestion around that 22,800 mark. And at the lower level, though, there is support around 22,650, which explains in the writing that we've seen in the 22,700 put. And there you have it, the 22,750 call. A bunch of stocks which will be on our radar. It'll be Hindustan Copper and Exide. Both these stocks have seen a big move. Exide yesterday and continues today. Hindustan Copper today. Hindustan Copper exited F&O ban yesterday, may re-enter it today. And Exide may enter F&O ban after the kind of open interest build up that it's seen over the last 1.5 trading sessions.
Okay, all right, Mangalam. Thanks very much for that. We have Sachitanan Uttekar of Trade Bulls now joining in to discuss the technicals of the market. Sachitanan, hi, welcome to the show. No complaints coming in. Bank Nifty seeing good amount of gains today, 48,900 currently for the index. What's your sense? Any financials that you like today?
Good afternoon, Mangalam. Good afternoon, Ekta. Clearly, I think the outperformance of Bank Nifty should continue. In fact, if you look at the entire data sequence, it looks very confident that going forward, this 49,000 hurdle may also be crossed. Today, we have seen a very confident trend above the December swing highs, and it has been holding on to that particular base of 48,700 well. So I think there could be an extension when it comes to Bank Nifty. The probable levels that we are targeting here is around 49,360 on the higher side on an immediate basis, followed by 49,600. So probably the momentum for Bank Nifty may continue, but when it comes to Nifty, 22,750 looks like a kind of a hurdle, at least for the day. We have seen some of the constituents not really contributing for that particular breakout to shape up. So probably for the day, Nifty looks a bit exhausted. We may see this particular hurdle of 22,750 acting as a very strong resistance for the day, and we may see again pull back below 22,700. So when it comes to Nifty, I think it's better to keep some short positions handy. But when it comes to Nifty Bank, I think the momentum has been very strong since the beginning of the series, and we expect that this particular rally may stretch towards 49,600.
And individual stocks, what are you looking at, Sachi? Because, a lot of these metal stocks are doing well. And then a bunch of select mid-caps, like we pointed out, there's Page Industries, which moved to the high point of trade, Federal Bank doing well, Container Corp. Anything that swims into your ken?
Well, Mangalam, a lot of stocks which were inherently, very strong bear grip, they are showing some signs of pullback. But I think it's better to be with some of the, very stronger trends. When it comes to metals, the entire space has been buzzing, and sale has been very consistent. Even right now, if you look at the structure, it is exhibiting a price target somewhere close to around 160 on the higher side. It's a classic, bullish flag formation on the daily scale, reiterating that the continuation of this particular move should see an extension. So we are optimistic here. We are recommending, building further long positions here, keep a stop loss somewhere close to around 148 when it comes to trading. And we may see a move towards 160. Positionally, 175 is the trajectory wherein, this particular move can extend. So I think sale is one particular stock wherein conviction is high, and the trading setup is also lucrative. So probably one can build some long positions here. When it comes to some of the other, commodity related spaces, MCX again, has displayed a breakout. The 3,700 call writing zone has been, crossed confidently. So probably we may see some short covering move here. which may extend this particular momentum towards 4,000 eventually. From a trading perspective, we are looking at a 38.80 kind of a target on the higher side. So trading long positions are recommended here with a stop loss at 36.20. And when we look at financials, especially ICICI Bank has been very consistent. Even here, if you look at the last 4 weeks, it was struggling at around 1100 levels. It was facing a lot of supply pressure there. But throughout the last week and going forward, what we have seen is a very strong build up here. The base now looks very firm at around 1100, and this seems to be the immediate base for trailing your stop losses higher. So probably ICICI Bank may extend its rally towards 1140. And I think within this particular space, ICICI Bank is the only counter wherein the conviction still remains high. So some trading long positions can be considered here. Keep a stop loss somewhere close to around 1102 for a trading target of around 1140.
Okay, all right, Sachitanand. We're going to take a break on that note. Thanks very much for joining in and giving us all of your strategies. Well, definitely a day where all the metals are buzzing and all the real estate stocks are also doing fantastically well today. Well, we need to take a short break, but on the other side, Manisha Gupta is going to be joining in to take us through what she's tracking in the commodity space. It's an important conversation lined up with SkyMed. Stay tuned.
Welcome back, and joining us on the show now is Mr. GP Sharma from SkyMed. Mr. Sharma, the first official monsoon forecast from SkyMed is out, and it's a heartening 102% is what you've given out as. What leads to that is El Nino done and dusted with? Are we looking at La Nina? So how is this year looking like?
Yes, you're right. El Nino, I don't know whether it's right to say done and dusted, because it will take a little time to get diluted to the extent of dropping below the threshold value. Okay, you see, water has got a lot of memory. We have seen whether it's a heat or cold or whatever, it takes a lot of time to cool down or become hot. So that's it. El Nino at the moment, it's a fairly strong 1.2 degree temperature above the normal is not a small thing. It will take a little time to fade away. Okay, so that is how. I think that's the reason the model is indicating that June may not start with a bang or so. So arrival of monsoon may not be as we desire. Okay, though it has got some psychological value also that the monsoon has arrived. Okay, on time, and the progress, initial progress. So that may not be all that good, because the changeover from El Nino to La Nina, that is the time when it's going to take place. Okay. So remnant effect of El Nino, I have seen earlier also, it doesn't leave without a fight. Okay. It resists. It resists. Resist means
so would you say that the onset of monsoon and perhaps the month of June might suffer a bit?
See, as far as the onset is concerned, as you know better, that we give that forecast a little later, about 3 weeks before the monsoon arrives or so, around 2 to 3 weeks. It's a little too early to comment. Monsoon is a very complex thing. It can do anything and everything. So it's not necessarily that it arrives late or something like that. You see, sometimes even if it arrives, its progress is slow. It becomes stagnant at some point of time. Even so the arriving on time also defeats the purpose as such. So that we have to comment a little later. But then the month of June will not be as smooth as one would like to see. Okay, the start of the monsoon. But then surely it will catch up later. Yeah.
How are the months looking like? Because you've been given a detailed sense of what the monthly distribution would be like as well. So the months of July and September do seem strong, almost above 100% for both of these months.
Yes. In between, month of August is dropping a little. But to me, I can reason it out, because the models don't give you any reason as such. Why is it so? Because I would like to place it with likely break in the monsoon, which is definitely preferred in the month of August. August is the favorite for like last year also. Last year, month of August, we had a long break. That's how it was almost a drought. 36% deficiency in the month of August. Okay,
Right.
so similar thing. Like in case it looks like some break may come up in the month of August, wherein it is showing decent rains in that month in Northeast India, which happens when the break is there. So that is why I would like to link that little shortfall with the break in the monsoon, but then it won't be that bad. Okay, but for monsoon months, they matter a lot, July and August. Okay,
Point
so
taken.
that's why.
Also,
Yeah.
that number is seen. Mr. Sharma, how would you look at Mumbai, Maharashtra? Last season, we didn't see too much of rains and there were big gaps in whatever little that we saw. So when it comes to geographical distribution as well, how would you look at Maharashtra and, of course, various other states? And are there some concerns there as well?
No, West Coast will be good. It will be rainiest possibility season for West Coast, starting with Kerala and then going across coastal Karnataka, Konkan, Goa, inclusive of Mumbai, should see decent rains, very good rains, rather above normal rains. That's what the forecast gives us at this stage. Okay, unlike the last season, Mumbai should have some good rains. After the onset, I think it should remain good. We will have the typical Mumbai, the episodes more than one in this particular monsoon season as such, and for that matter, even state of Maharashtra, which gives you always, which you keep you again susceptible most of the time, because the pockets like Marathwada and Vidarbha, they are very crucial as far as the agriculture is concerned, but they should get some adequate rains this season. Yes.
Wonderful. That will be great news for everyone that there would be good rains this time around. The quantity that you're talking about, 102% above normal as well. Mr. Sharma, just one question. Are you guys considering bringing out a metric that measures the quality of rains versus just the quantity of rains as well? Because even though there have been years where rains have been normal, the number of days in which they were spread were less. So in those days, there was intense rain that actually didn't help the crops a lot. So just wanted to know whether, is there any metric of measuring the quality of rains as well?
Unfortunately, there is no such measures as such, but you're very right in saying that the last few years we have seen the spatial distribution and the otherwise also it has become a little lopsided. A lot of rain in a few days and then completing the normals as such, but then doesn't suffice as far as the agriculture is concerned. So that feature can't be ruled out even this time. That gets attributed to most of the time which we talk about like global warming or climate change or so. That is what is doing. Frequent the heavy spells or so, short spells, but then heavy rains. That possibly we'll see even in this monsoon as well, because there is no change. That aspect there is it hasn't got diluted anywhere this time also. So we will continue to see that the heavy rains will be there on some of the days. Particularly, I will say this time, the projections they tell you that the eastern parts, okay, which didn't happen last year. Last year, whole of August was drought for most of the parts, but Bihar they had a surplus rainfall. Even West Bengal was okay. Okay, so this time also the distribution, it suggests you that the northeastern parts and eastern parts means starting with Bihar, Jharkhand, West Bengal, maybe some parts of Odisha also, they will see a little less than the normal rainfall. Northeast India, I don't consider much because the rainfall is so much there. The second rainiest pocket, even if there's a shortfall by about 10, 15, even 20% or so, it suffices. It saves you from the flood-like situation, which invariably you come across during the monsoon more than once over that region. Yeah.
All right, so we're going to leave it on that note. Thanks very much for joining in and speaking with us. So as of now, we can probably expect a normal monsoon. Manisha, thanks very much for taking us through that conversation. Need to take a short break. But on the other side, our special market masters with Mark Mobius. Up next, stay tuned.
Hello and welcome to a new edition of Market Masters. With a consistent history of 10 to 12% dollar CAGR over the last 10 and 20 years, India is now the 5th largest equity market in the world, and continued reforms should maintain India's, and I quote, fastest growing large economy end of quote status. We have with us someone who has been a vocal champion of India for several years now. Mark Mobius is a force to reckon with in the emerging market investing universe. He's currently setting up the Mobius Emerging Opportunities Fund. So I'm very pleased to welcome him on this special program edition of Market Masters. Mark, great to have you back on CNBC TV18. It's always a pleasure speaking with you. Mark, so let's just get the basic hygiene stuff out of the way. India still top of the list as far as the emerging market ranking for you goes?
Yes, it is. For many, many reasons, you know, I've been a big bull on India, but we must take a long-term view. And if you look at the long-term, India looks terrific. It's got the right population structure. Now with China slowing down, India is going to be taking up the slack in terms of manufacturing and exports. So India is in a very good position. There's no question about it.
You know, you're setting up a new fund, Mark, and you're in, of course, touch with lots of investors who want to put money into your fund and who know what you want to do. You want to put money into India. That's the largest weight for you. I mean, at least, where you want to go. From a foreign investor point of view, I mean, what are some of the pushbacks that you get right now? We're in election season right now. Most opinion polls suggest that Mr. Modi and the BJP will come back to power for a third term. So just wanted to sort of get your sense and feedback in terms of what you're hearing from investors.
There are questions regarding Modi having so much power and increasing power. But at the end of the day, India is the largest democracy in the world. It's got an incredible election system that goes on, as you know, for months. And I believe that the position of most investors around the world are beginning to change. They've, of course, been burned very badly in China, and they're looking for another place in which to invest. And India seems to be the logical choice. Now, of course, for global investors, they've been making good money in Japan. The US market has done very well. But at the end of the day, India is now beginning to outperform the US market. And it makes sense for people to look at India. Now, of course, there's a problem of size. There needs to be more equity offerings in India, more IPOs, and hopefully more government enterprises being listed in the market because, as you know, India has some very large government enterprises that could be listed. So that's a challenge. But of course, that will come, I believe, as Modi gets more strength politically. And of course, you know, he is interested in digitizing the Indian economy and is interested in technology generally. So we're in a very good position now with him getting stronger with a stronger political base.
You know, Mark, I want to come to, I'll get to asking you about what should we expect from the third term? What would you like to see from the government in the third term? Because so much of the infrastructure development and spending on infrastructure sectors, Make in India, import substitution, has been driven by government policy, right? It's not just services, it's now manufacturing, which is being built, and that's great to see. But before I do that, let me ask you this India-China question. I remember speaking with Rajiv Jain of GQG Partners. They're the single largest foreign investor in India now. And he said, you know, the shift from, people who invested in China and that money, you know, in a big way coming to India, it will happen, but it has not happened yet. It will happen in the future. Do you agree with that, Mark, that big shift is yet to happen?
Yes, and the reason why it hasn't happened as big as it should happen is because the liquidity is not there. In other words, if you look at the size, the market capitalization of the Indian market compared to the Chinese market, it's completely different. China is much, much larger. So large investors from the US and other parts of the world find it difficult to put their money, too much money into India. So that's the reason why I say there needs to be an expansion of the Indian equity market. That means more private companies being IPO'd, but also government privatization. And you mentioned infrastructure. I think one area where you can have a lot more size is in the infrastructure area. If you do IPOs of various infrastructure projects, whether it be bridges, toll roads, whatever. Of course, the railroads in India is one area that has incredible potential for growth.
Mark, hi, welcome to the show. Well, just focusing a little bit on the near-term theme of elections combined with sectors or themes that you would probably like. Anything specific? You mentioned infrastructure, but would consumption, financials be themes that you would look at as a run-up to elections and maybe even post-elections?
Well, post-election, I think the very interesting area would be hardware, technology hardware. As you know, India is a huge exporter of software. They're doing very, very good in software. But now there's a need to expand the hardware sector, technology hardware. And of course, as people want to diversify their supply chain away from China, India can take up that slack. You've got the population, you've got the capability, and I believe that's going to be a very interesting area for expansion. And IPOs, by the way.
Right. So, you did speak about a lot of supply or the possibility of a lot of supply in the Indian markets, etc. as well, Mark. I want your thoughts on three things in particular. We usually ask you to make predictions about markets, but if you could give us a sense of what your expectations from the elections are and what post the elections, Modi 3.0, what does that look like to you? And for the PSUs itself, you hoped that there would be some more offerings coming in. What would your thoughts be out here?
Well, one of the things that we're seeing, of course, is Modi becoming stronger politically. In other words, it looks like he's going to have a larger, a stronger position in the political structure of the Indian market. And that is very good news for investors because it means that he's going to continue to push for technology in India and the application of technology. That's number one. Number two, he's going to be pushing more for infrastructure. And that's going to be, of course, we've seen a lot of infrastructure spending, but I think that's going to be becoming much more important and critical for the growth of India. So all of the points are in line. We're in a very good position with Modi getting stronger politically.
You mentioned more supply, right, on the equity side. And that is perhaps one thing which perhaps we've not seen over the last 10 years. I'm talking about disinvestments. Do you think that will also be picked up, in the third term? It could pick up?
Yes. A lot, by the way, a lot depends on the ability of Modi to reduce the amount of bureaucracy for people who want to invest in India. As you know, there's quite a lot of bureaucracy for people wanting to put money into the Indian market. For the large investors, it's easier, but for the smaller investors, not so easy. So I think that's something that Modi will want to work on, reducing the bureaucracy and the paperwork necessary to get into the Indian market.
Are you buying public sector banks or public sector units in general? Because the PSU enterprise crossed that 50 lakh crore in market cap. We've seen a big, relentless rally out there. Where are you on that? Are you buying at current levels? Did you buy earlier? Your thoughts going forward?
Normally, we don't go into the banks, and that's a policy globally, with very few exceptions. We find that banks are subject to a lot of government regulation, and of course, they have problems down the line if you have...
Not just banks, the public sector enterprise in general, all the public sector units.
Yes, we're looking at the public sector very, very closely. We haven't invested yet, but we're looking at it very closely because we believe that's where you can get size.
What themes there?
Invest. Yes.
What kind of themes there in the public sector space?
There, I'm very, very interested in infrastructure. I believe that that would be a very high growth area. The rail sector is very, very interesting. And the airline sector is also interesting.
Okay. Well, Mark, we need to take a short break, but before we do that, just wanted your thoughts on the entire theme of the mid caps as well as the small caps. We all know it's been phenomenal. It's been remarkable in terms of the returns that we've seen for the mid caps as well as the small caps. But do you think that there should be maybe some amount of caution which could be probably seeping in? Do you expect those kind of returns to probably continue into this year, or you're probably going to take some profits now?
That's an interesting question. If you look at the U.S. market, you'll see that the 10 big tech sector companies are most popular. And that's not the case in India yet. That could happen. But I believe that the small and mid-cap companies are the ones to look at because they're oftenly ignored and they're not fully researched. So people who are willing to put the work in and look at these companies can really make good money. And I think that's going to continue.
Well, in the recent past, you spoke about Wari, Tips and NetWeb. Wanted your thoughts on if there have been more additions to that list.
That's a good question, but I'm not. We're now looking at them, and I can't comment.
You're going to that fund will be set up, and then you'll sort of comment. But those three still remain on the radar, Mark?
Yes, definitely, yes.
Okay, and of course, many more names, right? I mean, in addition to that, to those three names. By the way, Mark, by when are we going to see that fund?
When are we going to see what? The what?
The fund, the new fund, which you're setting up?
That will not come into play until September, October.
Okay,
We're now going
all right.
to the paper.
Okay, now just to press on that point about valuations a bit longer, right? We were talking about supply. We've had many instances of global companies, MNCs, reducing their stakes in the India entity, in their respective India entity, and essentially using that money and taking that money back home for a variety of purposes. You know, we had, for example, just to use an anecdote, the Whirlpool global CEO on the record essentially saying that there is a big valuation arbitrage between what the India entity trades at and what the global parent trades at. So it kind of makes sense to use that and monetize that arbitrage. Just your thoughts, Mark. I mean, these are business owners and sort of talking about this valuation difference. And of course, I mean, the implication being that valuations here are, quite high, relatively speaking. Mark.
Of course, you can look at that. All the multinationals almost that are in India, the valuations are higher than what you see in their home market. And there's a good reason for that, growth. A lot of people ask me, gee, India looks expensive on a PE basis, but they forget that the earnings are growing at a much faster pace than what you see in the US or China or anywhere else. So it's justified that these companies have a higher valuation.
All right. Mark, what we'll do is we have a lot more ground to cover, but let's just take that quick commercial break here. Stay with us, Mark. We are back with many more questions, both local and a bit about the global cycle as well. Stay with us.
Welcome back. This is special programming, Market Masters, and we have with us the ultimate master, Mark Mobius, Master of Emerging Markets and Master of Investing. Mark, we've spoken a lot about India and the equities out here. What's interesting is the sort of run-up that we've seen in the commodities space. A lot of these hard commodities having seen big multi-year rallies. Any preferred equity plays via this space? Do you like the metal space in India, gold, silver? How do you play that?
That's a very, very good point. I believe that every portfolio should have some physical gold. Very, very important. And you can see what's happened to gold and silver. Silver is going to be, already is outperforming gold. And I think there are a number of reasons for that. Probably the primary one is that globally, there's a new generation of investors who really don't trust the central banks around the world and don't trust the currency. And they want to hedge their portfolios by buying gold and silver. So that's going to be a very interesting development. And of course, as gold moves up, other metals move up as well because they're betting on commodities in general to preserve their wealth. So we're seeing a big shift. And of course, if you look at the cryptocurrencies, you'll see they're moving up at a fast pace as well, in line with gold and silver.
Okay. Mark, just on that point on commodities, I know you're an India bull, but we also have Brent Crude, which is at $90 per barrel. We have tensions simmering between Israel as well as Iran, which could possibly, potentially be a risk for crude prices. Do you think that could be a deterrent, at least in the near to medium term?
I don't think it'll be deterrent. I think there'd be a gradual increase in the price of oil and in dollar terms. And of course, that's reflecting not so much the oil price, but the depreciation of the dollar. The dollar is, of course, very plentiful. As you know, the Fed has been printing and printing. Now they're reducing, but still it's an awful lot of dollars out there. And that's a reflection of the weakness of the dollar, this oil price, and commodities in general, by the way.
Just a follow-up on the crude bit. Do you look at oil marketing companies as investable options?
Yes, we do, but we're more interested in oil companies that are exploring and are having the technology to discover new oil. So that's one area which we think is quite interesting.
Any other commodities, industrial metals which stand out? I mean, copper, for example, is being... we were supposed to have a big copper super cycle in 2021. We had a sharp move, but then that fizzled. Do you think, copper perhaps makes a big comeback? Just your view on other industrial metals.
Well, I think nickel is worth looking at. Nickel would be one area, mainly because of the battery.
Okay.
Electric car battery consumption is increasing. The need for batteries. So nickel might be interesting, but you've got to be very careful with these commodities because at the end of the day, the supply-demand equation could be really a problem. But we have to look at that.
Mark, you briefly mentioned about interest rates in the West, right? Do you think, so US rates have gone to 5%, 5.25%. Markets in the West have done very well. So one can say, well, if rates going up did not hurt, if rates coming down, will they help? But on the other side, for emerging markets, if rates come down and the dollar weakens substantially, I mean, that is a time-tested kind of correlation, right? It means more flows into emerging markets. Sitting here in India, is that the bet to make? Whenever rate starts to come off and the dollar goes south, I mean, that basically pushes a lot of money towards EMs?
Yeah, generally speaking, that's the case. If you see rates come down, it'll be more attractive to go into emerging markets. But the shift to emerging markets have already begun. You must remember that if you look at the US market and the Indian market is a good example, but other markets, Korea has done well, Taiwan has done very well. So people are beginning to diversify away from the US market, knowing that the US market has performed very well, but may not continue this trend. So I believe that you're going to see a lot of people diversifying into emerging markets, regardless of what the interest rate is. Now, of course, a lower interest rate means that people are going to be putting more money into equities.
Okay. Mark, we're starting earnings season soon with TCS. What is your sense in terms of the IT space, considering the global demand situation? Any IT stocks specifically that you like, considering there is a lot happening with regards to artificial intelligence as well?
Yeah, that's a very good question, because artificial intelligence is really changing the scenario for software in general. And those companies in the software space that are not taking advantage of AI will be in trouble. But I believe that they have grasped the opportunity, and there'll be actually more opportunities for the Indian software companies to export their software. So I'm quite bullish on software in general, and I believe that companies that are in this space will do quite well.
You mentioned in passing about the world moving to electric vehicles. I wanted to know whether you've bought an EV yourself or not.
No, I don't drive.
All right. Maybe he flies in the private jet. But, you know,
it's interesting that here in Dubai, if you select an electric vehicle, to hire, it's more expensive than the regular petrol engines. So
understandable given its proximity to oil. But, you know, speaking about that theme itself, a lot of people call Tata Motors as the Tesla of India. With money coming out of the US going into India, do you, where are you on that?
Well, I believe that, of course, the industry in India will grow at a fast pace with more and more people able to afford AI and companies that are in the space of applying AI to automobiles. And that's going to be a very good development. But electric vehicles are the future for India as well.
And speaking about the Tatas itself, I mean, a lot of these conglomerates have come back as well. We've seen, big announcements come by from the Birlas trying to set their house in order for a lot of their companies. The Tatas, of course, have been big wealth creators. Your thoughts on some of these conglomerates? Is there anyone that you like?
Well, Tata is probably the prime example of a company that's done so well in so many areas and really improved the quality of various sectors. If you look at what they've done in the airline sector and in so many other areas, and they're really a leader in many of these sectors. So I would say that at the end of the day, Tata will do very well simply because the demand in India is going to increase tremendously. And there's going to be a demand for electric vehicles.
Right. Mark, pre-COVID, for the 10 years or so before that, it was all about services, right? It was about technology. It was about not tangibles, not hard infrastructure. That's changed over the last couple of years after COVID. I mean, I think the world's woken up to the fact that manufacturing capacities in many areas actually is not enough. So there is a revival towards that. I just wanted to understand from you the big picture over the next couple of years. What are the big themes within manufacturing? Is it electrification? What within electrification? Is it cars as a theme to play? Is it power? Is just your overall sense on what are the big manufacturing themes which will do very well? Because at the end of the day, I mean, it's all in a way global. What happens globally comes here sooner than later.
Well, the key to the entire system now is technology. When we go to a manufacturing company, in fact, any company that we're looking at, and we talk to the management, the first thing we ask is, what are you doing in technology? How are you using technology to improve your profitability, improve your efficiency? And that is the key theme. And in manufacturing, it's going to be even more important because with robotics, with AI, the efficiency is going to be improving dramatically. And that's something that we have to look at and be aware of. You cannot be investing in a company that's not using technology to improve its profitability and its efficiency. So the prices, by the way, as a result of AI, will be coming down in real terms. And therefore, the competition will become much more fierce.
Okay. Mark, before we wrap up this conversation, you've previously given a target that the Sensex is probably going to hit that 1 lakh mark probably in the next 5 years. Leave us with any kind of targets for the Nifty and the Sensex, maybe near term, maybe long term, maybe 3 years, 5 years.
Well, I stick with that target. I think that's going to happen maybe even sooner than I expected. No question.
All right, 1 lakh over the next couple of years on the Sensex. Well, Mark, it's a pleasure having you with us here. Thank you very much for joining us, and good luck with your fund. And we hope to speak with you, around through the next couple of months, and of course post-elections as well. Thank you indeed for joining us here.
Thank you very much. Thank you.
All right, insightful conversation that the Sensex 1 lakh in the next couple of years and less than 5 years. And also every portfolio should have some form of physical gold. That was an important sane advice coming in from Mark as well. He spoke about a lot of the equities, etc. as well. But to hedge your portfolio by having some amount of gold as well wouldn't be too bad. With that, we've run out of time on this edition of Halftime Report and the special conversation that we had. And take a short break, come back. On the other side, we'll have Business Lunch, take all the market action forward for you.
Welcome back. Well, a day of consolidation, at least for the frontliners. The markets have come off from the day's high, but no worries considering that we are sitting at record levels. So 22,702 is currently where the Nifty is at. The advanced decline ratio largely even keel at this point in time. So let's see how that moves. For the mid-cap index also, given up a little bit of gains from the top. Again, there's a little bit of a crisscross, actually, you can see for the advanced decline, where the declining stocks have actually overtaken the advancing stocks. But nonetheless, maybe some amount of profit booking at the top, considering that we have the US inflation data. So maybe a little bit of cautiousness and wait and watch. Well, with that, it's a wrap on Halftime Report. Stay tuned. Business Lunch will take all the action forward.